Hello everybody, Rob here. Welcome to the second video as per usual on the channel during the week. So here is my little dirty secret. This is my research slash watch list. So these are stocks that I'm currently watching for a multitude of different things. First off is their usual snowflake score. So for example, their total score, how good the company is on their scale of 1 to 6 on the 5 things here that this website specifically tracks. None of this is 100%, obviously. You never know. Things could be different. But it also breaks down to all the different scores and stuff like that. So that's one of the things I'm doing. But one of the main reasons why I'm doing this, as you can see, there are a lot of stocks on this portfolio. There is currently, I want to say 159 stocks currently being researched by me and watched by me. In regards to what's going on. So I can actually look at their overall 1-year return, for example, and just see. So for 1 year, for example, this company here, the Canaccord Genuity Group, which I haven't really listened to that much, unstable stock record, shareholders been diluted, blah, 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 blah. It's a financial service company. They returned over 100% this year. Why? Well, look at that right there. They started the year at $5. They're now sitting at 11. So there's that. Sometimes the 1-year return kind of gives you a good indicator as to what's going on. Then you can look at the company and see why. Whether it was just really good financials, or was there a bump and then it kind of started to kind of go down, up and then down, or is it just kind of a steady rise? Usually the companies I look at when it comes to the 1 year, usually the companies around here. Because you can see a lot of them are green for the 7 days. Like Maple Leaf Foods, for example. If we looked at their 1 year. So you can see for overall for the year, they're doing good. They've had some big ups, some big downs though as well. So, this is my research. This is where I look at my overall holdings in my watch list and research companies to see who is worth the next investment if I'm buying a stock. All these are Canadian companies on the TSX and the Canadian Venture Exchange and the Canadian Stock Exchange. All 3 of them. So yeah, investigating these companies, looking into their stuff, their numbers and all that. But, and then obviously looking at the news as to what's going on with them. Shows you here where all the different companies sit when it comes to their beta, aka their volatility. This can't do anything because it's just a watch list, but here's all the different companies, and if I had them for a year, what their return would be, which is interesting. And then here is their actual diversification. So this is actually the main reason why I'm doing this, is because I can actually see the stock and what it does, what branch of thing it's in. Like, I really want to stay away right now from financials and energy, specifically oil and gas companies. So obviously everything on this list is basically these companies here are gone. So ET would be a communications equipment company, so I'd have to keep that in mind. Some automobile companies would be interested. Support services, printing companies, research and consulting services. A lot of this you can see is consumer finance, so don't want to really deal with consumer finance. Metals and mining, we have gold, steel, metals. There's a couple iron companies like Labrador Iron, things like that. Companies that work on road and rail, specific railroads, in this case EIF, airlines, marine port services. Got a couple different companies doing cable and satellite. We've got Rogers, Cogeco, TELUS. TELUS again, Bell, I think Rogers again, because Rogers has more than one stock. And breaks everything down for me. So this is one of the things I look at when it comes to stuff. Like, see, banks here, for example, for me, banks are separate than financials. And I really like that. So banks, in my opinion, are different than financials a lot when it comes to stocks, because they're a lot better. So we got, regional banks, diversified banks like BMO. Region banks are like the Canadian Western Bank. It's only based out of, I think, Alberta and BC and maybe in Saskatchewan. I have to double check that. The only issue is I wish I could click on these. But yeah, so this is my little secret. This is how I actually look at the stocks I'm interested in versus the stocks that I want to invest in. Now, mind you, 17% of these stocks turn out that they actually are real estate stocks. Go figure. I actually look at what the real estate stock is and what it's involved in. So retail stocks obviously deal with retail properties. You have office, you have residential, hotel and resort. Then you have diversified REITs or real estate investments or real estate trusts. Those are basically companies that are investing in a whole bunch of things. So residential, consumer, office, etc., etc., etc. They have the industrial ones, which actually rent out industrial, industrial warehouses. They're the ones that would own, like if you go to certain areas of town and there's what looks like basically would be almost like a business condominium where it's a whole bunch of businesses in a short little thing. I think they call them industrial parks, where it's basically like, you'll have Steve's Plumbing, and then next to it you'll have Mark's electrical services, and then you'll have some dude's steelworking, piping, or plumber or whatever. They own properties like that. So overall, the plan is for this to slowly work my way into other fields other than the financials. Because with COVID, I kind of went heavy on the financials for a while. And now it's like, okay, I need to start branching out. I need to start making things a little bit better for myself and diversifying a little bit. Because right now we've got 1, 2, 3, 4, 5, 6, 7, 8, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So we got 24 out of the probable 30 something current stocks that are all financials. So the plan here is to start getting, food companies, get some more real estate put in here, get some banks brought in, some utility units companies, probably some maybe road and rail, some household products and things like that. Some more materials and some more staples and food retail stuff. So I'm talking like the keg and things like that. Though those are technically, I think, a REIT. I'd have to double check that. But yeah, so this is my little dirty secret. This is what I use to research stocks and could have come to the fruition whether to buy or sell. And I really enjoy it, to be honest with you. It breaks down everything for me. If you're interested, Simply Wall Street, I think you get 10, it's either 6 or 10 free stock breakdowns a week or a month. Either way, 6 is more than enough for the average person. That's what I did originally, but now I have the one of the, I think it's the unlimited package, which is like, I think now it's a monthly thing of like $14. Prior to this, it was just a set price. Can't remember what it was. But to me, it's worth it because I do a lot of homework and do a lot of investing, and I am constantly tweaking and modifying, researching and reading. I have this app open, I want to say maybe 8 or 9 times a day, and I'm reading news articles and all that stuff. And you can set up multiple portfolios. So for example, I have my actual personal portfolio, then I have the YouTube portfolio sitting off on its side there. But yeah, so with that in mind, thanks for watching, everybody. I'll see you next Monday for the next Monday investment blog. See you then. Bye-bye.